my earphones are.
Mo Kama's Sunday service. Today we're going to be talking about whether or not I should be buying or whether you should be buying NVIDIA stock. And this is really important right now because the earnings just came out. So we're going to kind of do some fundamental analysis today, which means we're going to check underneath the hood of NVIDIA today to figure out whether it's a good company or not for you to buy. And for this one, I don't think the jury is out. NVIDIA is definitely a good company to buy. But let's dig into the earnings and talk about that more in depth. All right. So, looking at the earnings reports, if you just Google NVIDIA earnings, this is what's going to come up. On their earnings per share, they beat their expectations by 8.66%. And their revenue, they beat that by almost 6%. The revenue came in at it came in at 35.08 billion, and it was expected at 33.11 billion, right? So when it comes to the stock price, it's not necessarily whether or not a company is good or its earnings were good or bad. It's more of about, like, did it beat expectations or not when we're talking about just the stock price. And if you go deeper into the earnings, go grab the 10Q or the P&L from the company. The way to do that is to Google NVIDIA Investor Relations. Every publicly traded company, if you type in their ticker or the name of the company and then Investor Relations, they all have a page where you can actually get their financials. And who was I looking at the other day? I think it was Ian Dunlap from EYL. He wasn't on an EYL platform. I think he was on Matt Hoffa's show or something like that. And he was talking about going to different websites to get this information. And yes, you can do that. But me, I like getting the raw data myself as it's reported directly from NVIDIA, right? Instead of going through another platform. And I also think that it's good for people to know how to read a balance sheet or an income statement, right? To actually go through the numbers so that you don't need to rely on someone else's interpretation of data. So, looking at NVIDIA's earnings, their revenue, as we said, it was $35.08 billion, right? So $35 billion. Their cost of revenue or their COGS is 8.9 billion, and their gross profit is 26.1 billion. And we're going to talk about margins later, but this is ridiculous in terms of what the margin is, right? Their operating income or their profit is about $21.8 billion, right? Or if you're going to net income minus this other interest, expense, etc., $19.3 billion, right? So they kept a lot of what they took in. And if you look at the growth from last quarter this year, they were at 18.1 billion in revenue. So they almost 2x their revenue in 1 year. Crazy. So also, I think it's good to look at the assets versus liability ratio, especially if we are in an economic downturn or you believe we're going to be in one soon. I'm not saying I believe in that, but specifically in times where interest rates are up or economic news may not be that great, you want to look at a company's assets and their liabilities, right? Their balance sheet. And look at the ratio. So their current assets, they have 67.6 bill, or actually, I'm sorry, this number, 96 billion dollars in total assets, right? And then in total liabilities, they have $30.1 billion. So they have like a 3-to-1 asset to liability ratio. So NVIDIA has enough cash, it has enough assets on hand to probably weather most of any storms, at least how it's currently constituted and what its numbers are, right? So a 3-to-1 ratio is really good. We've looked at some really good companies in the past. I think Meta, Microsoft, when their earnings came out, they were like 2-to-1, 2.5-to-1, right? But this is really good, right? $96 billion in assets and then 30 billion in liabilities. So it has enough cash to weather much of anything, right? Looking at their revenue sources in general. So this quarter, their data center brought in 30.7 billion. And they break that data center category into two specific categories: their compute, which is their chips. This is their cash cow, right? So that's 27.6 billion that their chips brought in this year alone, right? This is their business, right? And then the networking is like all of the things related to the chips and the data centers that they're opening, and the things that they're doing, probably the consulting to use their chips. That's included in that category. But that's where all the growth is coming from, is in the sale of their chips. If you look at last quarter, their chip sales were 11.9 billion, right? That almost 2.5x to 27.6 billion, right? They can't keep these things in stock. Then they have some other categories like gaming, their GPUs up slightly, professional visualization up slightly, automotive chips. Actually, that's almost doubled, but it pales in comparison to their data center revenue. And then their OEM up slightly as well. But if you look at just the revenue over since the last quarter, it's doubled, right? It's almost 2x. Their margins are ridiculous. If I had a business that had 75%, 74% gross margins, like, you can't get any better than this. Like, yes, you could have 80%, 90% margins, but like, I don't know any trillion-dollar company that's running at gross margins of 74, 75%. So they're keeping out of every $100 that they bring in, they're keeping 74, 75 of those dollars. That's unfathomable, and that's why this company is like ridiculous. And then you look at where they were last year. They were at 74%, so it's almost like they increased their margin somehow while doubling their revenue. So powerful company. Their operating income is going up, doubled, right, from 10.4 billion last quarter of last year, or this quarter of last year, to 21.8 billion, right? Can't say enough good things about the company. Their net income almost doubled too. So yeah, looking at them internationally, and this is where I wouldn't say a problem is, but in terms of a problem for future growth, right? They're making 14.8 billion in the US. Singapore's up. The issue is China, right? It's 5.4 billion. This could be up way more, like it is in the US, like it is in Singapore, but our government is having or gives restrictions, and has put restrictions on NVIDIA selling some of its more advanced chips to China, right? So this company, this number could be, if this would have doubled, this number could be a lot higher if our government isn't restricting the sales outside of the U.S. and to China and some other countries as well, right? So specifically, if you look in some of their earnings, this is what they're saying about the government in October of 2023. USG, the government, announced new and updated licensing requirements, where in China and other country groups, in terms of Saudi Arabia, UAE, and Vietnam, not including Israel, they're essentially preventing them from selling some of their more advanced chips, right? And their upcoming Blackwell chips and systems will also be subject to these requirements and require a license to China and these other groups. And to date, they have not received these licenses to ship these restricted products to China, right? So that's where their growth is going to be limited, is internationally. And it's not because of their product or their supply and demand issues. It's because the government is limiting them from shipping to China due to national security issues, right? Looking at NVIDIA Blackwell supply, this is why, and specifically why when we were buying, we should, to be candid, I own 275 shares of NVIDIA already, so I'm pretty much talking about where I should buy again, potentially. My average price in my retirement account is $106, and my wife's is $108. So that's where we are in terms of where we in terms of when we bought a couple of months ago when it dipped down into that $100 range. And I really like the fact that their new chip and their new system, the Blackwell system, they're already sold out. Like if you've been listening, right? So to have a product that's not ready to ship yet and it's already sold out, like, you know, that's the type of company that I want to invest in, right? So if you're looking at their production shipments, they're scheduled to begin in the fourth quarter of this year, 2025, and will continue to ramp into 2026. We're talking about the new Blackwell chips, the most advanced chips on the market. And it says specifically the demand for Blackwell is expected to exceed supply for several quarters in fiscal year 2026. We're talking about 2 years out. They're saying they're going to be sold out of Blackwell chips. Like they're anticipating that. So do I think NVIDIA is going to get bigger? Do I think they could raise the prices on their chips and no one would blink? Yes, because they're going to be sold out. So typically in terms of supply and demand, when things are sold out and you can't get them, you can raise the price. And even if they try to increase their supply and capacity, they anticipate being sold out because of this AI race. So is NVIDIA going to make more money in the future? I think so. All right. And then, like, I love their CEO, like Jensen Huang. He's done a lot of recent interviews, not maybe a lot of recent interviews, but I've listened to a podcast called Acquired, and he did an interview, and the guy's a rock star. He pretty much founded this company in 1993. They've also done an episode on his company, and he's essentially the one to solve the problem of 3D graphics for the PC, right? When we're talking about graphics cards, if you know anything about computers, graphics cards didn't used to exist. You would essentially be doing all of the processing, the visual processing directly on like the CPU. And he essentially created a graphics card which helped video games become what they are today, right? And they've gone through some ups and downs, but essentially post crypto boom, people started using their chips to mine crypto. And then once they realized that they could start using these graphics cards for all sorts of things in the medical fields and things of that nature, they started using it to solve these complex problems. And that's when, the AI revolution came about. Now that every large mega cap company is trying to enter the AI revolution and they have the best chips, right? Everyone is spending billions of dollars on trying to acquire the compute to compete. We're talking Meta, Tesla, Amazon, Google, Apple, Microsoft, everyone. All of these the few $1 trillion companies we have, the $100 billion companies that we have, they're all buying his chips, right? And the only closest competitor is AMD, and they don't have the infrastructure that NVIDIA does as it relates to their developers and architecture, and their chips just aren't as good as NVIDIA chips are yet. And they're a smaller player as compared to NVIDIA, and they're the closest, right? So NVIDIA pretty much has a moat right now in AI chips. Also, their chips are used in cloud computing, and as we've seen all of these earnings from Microsoft, Azure, Google Cloud, Amazon AWS, which is the big heavyweight, right? Cloud computing is growing too, and they all need these chips for their cloud computing services to work. Right? Also, the guy is very down to earth. He still has his dishwasher job at Denny's on his LinkedIn page. But guy went to Oregon State and then got a master's at Stanford, right? So really dope CEO. In fact, him and the CEO of AMD are actual real life cousins. Lisa Su and him are cousins and are related. So yeah, right. So these are some questions that I'm going to kind of look at the actual stock price and the stock chart. How did the stock price react after the earnings release? And then the quintessential question is, should I buy NVIDIA stock? And I think the more important question when buying any good stock is not should I buy it, but when should I buy NVIDIA stock, right? When? Because I don't believe any stock, no matter how good it is, should be bought at all-time highs. So then the question becomes when, right? Because we just looked at the fundamentals, and the fundamentals of this company look awesome. So now let's look at Thinkorswim. Where are we? All right. Let me pull this down. Why is this tripping? Okay. Can you see my screen, Ash? I hope you can. So, looking at a
Yep. Yes, I can.
looking at a 5-year chart of NVIDIA. So, typically for anything that I'm thinking about for a long-term investment, we are not talking about trading. If we were just talking about trading, I would not be looking at the fundamentals at all. I don't care about the fundamentals of a company if I'm just trading it, because I don't intend on holding it for a long period of time. For stocks that I'm thinking about investing in, meaning like a 3, 5, 7-year time horizon, I'm going to look at the fundamentals. And then I'm going to look at the technicals, which is the stock price. How is the stock price doing? Right? So generally for anything long term, I'm going to be on a 5-year chart, on a weekly or monthly chart, and then I'm going to draw these fib levels, these Fibonacci retracements, to kind of get a sense of where the stock has been and then how discounted it might be at certain levels, right? So if we're just looking at NVIDIA right now on a 5-year weekly chart, and I see this 34 week moving average, it tends to be the only place where NVIDIA gets discounted over the last, year or so. If I generally would love to catch something at a 200 week moving average too. I love the 200, but like NVIDIA hasn't seemed to get there. If you would have been waiting for that, you would have been waiting a long time. You would have been waiting since April of 2023, and yeah, a year and a half. NVIDIA has taken off and has got nowhere near this 200 right here. So I'm just looking at the technical price. It looks like recently the best place to have entered NVIDIA, and I think we bought some around right here, would have been at a 34-week moving average if you zoom out. So right now, my price for potentially grabbing NVIDIA again would be around 115 to 120, right? I would love it at 115 to 120. I see a bunch of support and resistance right here at that level, right? Let's zoom in. If we're looking at this candle right here, it pops down. This one pops up. This one, this one, this one, this one as well. This candle here, this candle here, these candles, they seem like they are gravitating around that 115 price and that 120 range. So that would be a place that I would think about grabbing NVIDIA for long-term upside. That would also be more than a 20% discount from its highs. It'd be like a 25% discount from its highs. So yes, I would grab NVIDIA, but NVIDIA is hitting all-time highs. I never suggest buying any asset at an all-time high. In fact, the most important thing for me in buying stocks is to grab it at a discount, grabbing something good at a discounted price. So that's where I'm currently looking, and where I have an alert set up, right, at 115. And if you just look at the daily chart as well, I just like that price range, right? And if you're waiting, if you want to be even more conservative, where I absolutely love NVIDIA is at $100, right? So from a more aggressive, and I wouldn't even really call this aggressive, but like that, a moderate level, 115 to 120 looks good if you don't want to miss it. But from a conservative position, and you might be waiting forever, it may not ever get down here. Love that 200 moving average on a day chart as well, right? But I really love where it bounced right here around $100. But will it ever come back down there? You might be waiting forever for it to even come back down there. So I don't know, right? But I really love that 115 to 120 price to come back down, because NVIDIA's structure, it is making new highs. after it's made all-time highs. So if it's making new highs, the stock is bullish. You have these lower period moving averages, the 21 on top of the 34, on top of the 50, on top of the 200. So NVIDIA is bullish. It reported earnings that for me looked great. Wall Street expectations were a little bit higher, and so it didn't really go crazy after earnings. But for me, like, it looks like the stock is going to keep growing. And who knows what this new administration holds? I don't think the new administration is going to take off any of these restrictions on China. In fact, they may get worse. So I don't. What can I don't necessarily think that it's going to have significant growth in China because of this new administration. Just because I don't think the Trump administration is going to be any more. How should I put this? I don't think the Trump administration is going to allow NVIDIA to sell more chips to China than the Biden administration is, right? So that issue is still going to be there in this new administration, but its growth in the U.S. and other places are still, I still think it still has enough room for growth, as we are still in the middle of this AI race and people are making these new AI products. So then, like, let's look at how did it react right after the earnings were reported. So initially, it went down, but then overnight, after hours, it hit an all-time high. So honestly, like, I'm looking at this, and it didn't really go much of anywhere, right? It beat its expectations. It didn't blow its expectations out of the water, but it did significantly beat them. And NVIDIA is already at all-time highs. So for me, I still think it's safe for me to hold long term, which is why I will be holding it long term. I don't think it's going to get anywhere near my price where I entered anytime soon, back down to that $100, $110 mark, which is why I'm saying like 115 would be the best place for me to re-enter this thing. But, so far so good. And then if you just go look at it in comparison to, let's go look at AMD, right? This is its nearest competitor. AMD's stock price does not look so good after it reported earnings, right? It just doesn't. I think it reported earnings probably on this day, just looking at a drop off. Usually if there's a gap, that's when it reports earnings. Yep, it's right there. So versus AMD's earnings, NVIDIA looks a lot better to me, and this is the number 2 in the space. So the number 2 doesn't look so good versus the number 1 in the space looks way better, right? So I love NVIDIA, but the central question is not if you should buy NVIDIA, it is when. And right now I do think it's too expensive, but if it comes back down under that 120, I would think about dipping back in. All right. So now that we've gone through NVIDIA's earnings, let's talk about my weekly stock picks for this upcoming week, November 25th. My disclaimer, and this is for this entire broadcast, this information is for educational purposes only. I am not a licensed financial advisor. Please refer all of your trades and investments to your licensed advisors. Investing and trading is risky. Do so at your own risk, and do your own research. All right. So I look at koyfin.com, KOYFIN.com. This is a free tool that they have that analyzes the U.S. sectors, right? So for me, how I trade is I like to look at the trending sectors and then try to grab those trending sectors on a pullback, right? And so just if you had noticed, we are switching gears from investing to trading, right? And candidly, my investing has done better than my trading over the last few months. And not even the last few months, the last few years. And most people will tell you that their investing typically yields better returns than trading. So once again, trading is more risky, but it's something that I have endeavored to try and conquer. So that's why I still do it, right? To try and get better every single day. So when we're looking at hot sectors, we're looking at the regional banks, right? We're looking at oil, actually. Oil and gas, the energy sector has actually been pretty bullish over the last couple of weeks, so I will be looking there. XLY, which is where I have been looking. I'm currently in an Amazon trade that I've already scaled out and it's already profitable. Like I said, energy sector, financials, XLF looks really good. XLC looks good right now. And then XME, I am in an Alcoa trade that I've been in for a while. That's up 100% or more. So I'm sticking in that one. But those are really the sectors, right? So KRE or the Russell, because the Russell is linked very closely with the KRE, XLY, Tesla and Amazon and Disney, XLE, the banks, communication sector, and then mining and metals, right? So how do I build my watch list knowing what sectors that I'm going to be targeting next week on pullbacks? Let's go back to Thinkorswim. So let me go to my trading setup. So let's go. What was the first sector? KRE, right? So KRE itself on a pullback, because it's pretty strong, it's trending. I use some tools to figure out whether something's in a trend, but a way that you can do it is just looking at the moving averages. Are they trending upward, like from the bottom up to the top? This is a representation of the 34 moving average, the 21 as well, just a different representation of it. It's trending upwards, and you can tell it's trending because we're making higher highs and higher lows, right? So KRE is trending upward. So that's on the list. The Russell is trending upward. Even though it doesn't look as good as the KRE, I would love the Russell better if it breaks this high of 24.55 and then a pullback from there personally. But I prefer the KRE over the Russell, even though they're closely linked. So those two are on the list, but KRE I would prefer over taking the Russell. What was the other strong sector? We had KRE was on the top. Oh, XLY. Tesla and Amazon are the primary or the most heavily weighted in this sector. So I like XLY, but recently I haven't been finding much liquidity in XLY. I trade options, mostly calls and puts, and XLY, I guess we have some. They're just really expensive. Or look, so Ange, we've been talking about this. So look at the December 20th date on the expiration. That is the OPEX date where most options are going to expire on the third Friday. That's typically where I find the most liquidity in stocks, right? And so even here where we have a bunch of liquidity, look at that spread. That's ridiculous. That's like a $4.45 spread. And so that's a lot of risk. Like, so for me, like that option is mispriced. Maybe it's because it's after hours. I know Thinkorswim said it's under maintenance, so maybe that's it. But that spread is
Yeah.
ridiculous, right?
Mo, it looks like your screen is stuck on the wrong page 'cause I don't see the. Or can you
Oh,
show me where you see
hold
the?
on. What screen were you on? Are you on Thinkorswim? No,
Yeah, I see it, but I don't see where the spread is. Maybe I just don't see where the spread is.
right here. Can you see 445 versus $9?
No, I'm looking at position statement.
Oh,
There's
maybe
a,
that's what it had me on another window. What about now?
yeah, there we go.
Okay, my bad. All right, so XL. So did you see any of the other stocks and stuff like that I was looking at?
I saw it on Koifin.
Oh, got it. Okay, so maybe I was looking at. I'm sorry about that, folks.
That's
So
fine.
let me just go back a little bit. So just looking at the
Yeah, I didn't see
Russell.
any of these.
Okay, so looking at the Russell, right? What I said I wanted to break the high of 24.55, and the KRE and the Russell are in the same boat, right? KRE is the regional banks. That is making new highs. So I like this on a pullback better than I like the Russell 2000 and I would trade it through the IWM. So I would rather have the Russell break this new high before I start trading it on a pullback. So I like KRE over the Russell. If we look at XLY, XLY is also trending. But when you go look at the option prices, because I trade options, I don't trade the stock itself, even though it has liquidity on OpX, which is the third Friday of every month, right? What I found when trading over this last year is that the most liquidity in the options is usually on the third Friday. Or like let's say the 29th probably has a bunch of liquidity too, because it's the most it's the expiration date that is coming up very soon. But if you're going out more than like a week, usually OpX has the most liquidity. So here you have 5,600 in open interest, which is great, but the spread is $4.45 or $4.55 apart. So like trying to get into this option with this much of a spread takes it off of my list, right? Because that's ridiculous. I usually like something, like I said, at least 10% of the option price. So the spread should be no more than like 90 cents apart. And this is $4. So this is too risky for me. So you would have to be extremely precise with your entries and exits. And then it looks like the people who are bidding and selling the stock are on two different pages. So I don't like that. Even at this closer strike price with no liquidity, look at the spread. It's ridiculous. So I can't trade XLY for that reason. So instead of trading XLY itself, I would be looking inside of XLY to go see if there's anything else like Tesla. Tesla is trending. So Tesla is going to look better on a pullback, and usually the liquidity is a lot better. But look at how expensive these options are. To buy one contract of Tesla on that December 20th date, it's going to cost you $2,600, right? So even the closer expiration dates is 1850. So for me, I can only trade these with spreads, right? Because if I do a spread, then if we go out to December 20th, and let's say I sell that one, and then I buy 1, 2 out, that's only $5. That's $500. And so, like for me, I can take a couple of these or 3 of these, depending on what your budget is, and that's more affordable for me. But if you have a cash account, you may not be able to do this because you do need a little bit of margin when you are selling spreads, even though you're only risking like $500 or whatnot. But I could take Tesla, but I can only take it with spreads. And then I could do that with Tesla because there is enough liquidity here, and the spread price between the two is not crazy. When I say spread, and I know this might be confusing, I'm using two terms interchangeably. So buying a spread is selling an option and then buying one at a lower strike price, right? At least on the put side. That's what I mean by selling a spread. But then I'm also using spread to mean the difference between the ask and the bid price, right? So here, the spread between these two options is 30 cents. Here, it's 30 cents as well. But when I'm buying a spread, that means I am selling this strike right here at 355, selling this put, which is bullish, and then I'm buying the one that's 2 strikes up, right? So that's what I mean by spread. So there's two definitions for that. So I could trade Tesla on a pullback. I also could trade Amazon. Actually, I wouldn't anymore. I'm in an Amazon trade, but the trend is breaking. So Tesla looks better than Amazon. So inside of XLY, the only thing that I might trade is Tesla, right, itself. And I am currently in an Amazon trade right now. So me personally, I'm only up $25 on my remaining position. So I'm probably not going to hop into Amazon again, right? Okay, so Amazon, XLY. What else was next that was hot? Oh, XLE, inside the energy sector. Energy looks hot. Look at the New higher highs, higher highs, higher highs. We're in a war environment right now, so oil stocks usually do better in a war environment. So I do like XLE. Does XLE have liquidity? It does, but once again, the spread is kind of crazy on XLE. And I would have to look at this when the market is open because this might just be after hours price action. But I don't like the fact that the difference between the bid and ask is more than like 35 cents here, right? So I would be cautious about XLE. And yep, like I said, all of the liquidity is in December 20th. And so once again, if I can't trade the ETF itself, which has all of the stocks within it, then I'm going to go look at what's inside. ExxonMobil doesn't look that great in terms of the trend. It looks more sideways, but what I've really been looking at is CVX or Chevron. Chevron looks better. So, and if you look at Chevron, Chevron does have some liquidity and the spread is not that crazy. So Chevron is probably where I will look next week. And if we go to my chart and go to the energy sector specifically, what looks good in the energy sector is Chevron. WMB looks good, which is what I've been looking at as well. Those are the two that I would probably grab, would be Chevron and WMB. I think I was looking at WMB last week as well, and it had some liquidity. It does. Had a higher strike, more in the money, but you got 4,000 open interest. The spread is only 20 cents apart. So I would also put that on the list. So in terms of XLE inside of that sector, Chevron and WMB are on my list because they are both heavily weighted inside of XLE and in some of these oil ETFs, right? The next one I think was XLF and XLC. If we look at the financial stocks, am I in anything in the financial stocks? I am in JP Morgan. I did scale out of that one out of half of my position. I took that with a vertical spread, scaled out of half of my position, and that one is up still. So I am currently in JP Morgan. I took that on one of these pullbacks last week. XLF looks good itself. Bank of America looks good. Wells Fargo looks good. Citi looks good if it breaks that high right there. Visa looks decent. MasterCard, not. I like Visa better than MasterCard. American Express looks good. I still like, and I've been talking about this the last couple of weeks, I really like the financial sector. Almost all of the most heavily weighted stocks inside of the big banks, insurance sector, and credit card sector, they're all trending higher. So this is one of those situations where you could buy almost anything in the sector and it looks like everything is going up. Like you could have just, threw a dart and except for maybe SPGI, but even SPGI looks decent. Like everything is up. So you would have done well by taking almost anything last week, maybe with the exception of MasterCard. But even MasterCard is still in an uptrend. So the financial sector looks really good still. So this is probably, even though I'm in JP Morgan and I don't like to be heavily weighted in one sector, this is where I'm looking next week as well. And then XLC, even though Google and Meta are the most heavily weighted, Google looks like a dumpster fire right now because of the DOJ news, which I'm hoping with the Trump administration is going to turn around. They're trying to get Google to sell Chrome because this business is too good, if you ask me. So looking at next week in the communication sector, I don't like Google. I don't like Meta, but I do like Netflix. I still like T-Mobile. And T-Mobile, I feel like it still never pulls back where I wanted. Disney looks good. And AT&T. So the phone companies, Netflix and Disney, is what I would take in XLC. I probably wouldn't take XLC because generally I can't find any liquidity in it from an option standpoint. And look at here, same thing. So I can't trade XLC itself, the ETF, but I can trade those four names inside of it, which would be Netflix. Netflix is usually extremely expensive, so I would only trade that with a spread. T-Mobile, Disney, and T. Disney is probably still number one on my list, like it was last week, but it didn't really give me a pullback or a chance to enter because it has a ton of liquidity and the options are relatively inexpensive as well, right? So I love Disney. Um, Probably not enough liquidity for me to trade it with a put spread to the upside. So I'll probably take an option if it pulls back. Just buy a call on it at one of these levels at the money. Or if it dips a little further and this becomes less expensive, I might take one more in the money. Right. And then the last sector I think it was after XLC, XLF was it XME? I think it was. The only two that I really trade in XME are XME itself. But sometimes XME doesn't have that much liquidity. It actually, no, the spread is too wide, right? Look at that $3.50 spread. Ton of liquidity, but there's $3.50 spread. So I would not take XME itself on a pullback because the difference between the bid and ask are too crazy, and that's too risky of a trade for me. But I am currently in an Alcoa trade that is up, right? I've already scaled out of that twice. This is the one that I'm up like 100% on. So I'm currently in an Alcoa trade trying to recover from that big gold loss that I had a couple of weeks ago, right? But Alcoa has been up. I think I grabbed it on this day right here. And ever since, like that one has kicked up where I've been able to scale out twice. One at 25% or half of my position at like 25 to 30%. The other another position at like 90%, and now it's up like 110%. And I think I have that until December 20th. So I'm hoping that it breaks this high right there and keeps running. But I have a runner that's that's at not, it's even more than break even. If it gets to 50%, then I'll probably cut it, which will probably be down here. But right now it's up, so I'm just hoping that it consolidates a little bit and breaks this high, and I have plenty of time until expiration to hold this trade. And then what else is big in XME? Alcoa, Freeport McMoran. Nope, looks like a dumpster fire. So really, Alcoa is the only one that I would suggest in that sector on a pullback, and Alcoa usually has some liquidity. This is the one that I own that's way up from where it was when I bought it somewhere down here. But look, there's some liquidity here at the 45 strike and plenty of liquidity, and the spread is less than 10 cents, right? So that's what I'm looking for. So Alcoa on a pullback, I might enter a second position if it pulls back a little bit, like down to this level. But that's really my watch list for this week. So just recapping, I'm looking at KRE more so than the Russell. If KRE comes back on a pullback, I am looking at XLY, but probably just Tesla. I'm currently in an Amazon trade that I've scaled out of, but Amazon is losing its trend. So Tesla is like the only one. HD is also there. Actually, Home Depot's looking a little better. Just broke its high. So maybe Home Depot too, but Home Depot is usually mad expensive. Yep, on the options it is. It's $1,100 an option. So not Home Depot because the options are too expensive. In XLC, we talked about Netflix, T-Mobile, AT&T, and Disney. Inside of XLF, we talked about almost anything, but the big banks all look good. JP Morgan, Bank of America, Wells Fargo. XLF itself as an ETF looks really good. And then we also talked about XME and just Alcoa. So that is my list for next week. So what I typically do is I go look at Koifin, and let's say on Monday, I'm going to be looking at the levels at where a good pullback would potentially be, where there's some volume specifically. Like I do like to use this volume profile indicator and go figure out where all the volume is. So like if we were talking, let's go look at something that we actually might want to get into next week. let's look at KRE. Right. So a really good pullback for me. I see a bunch of volume on KRE at around 65.50. So that's probably a decent entry point, and I know these things are going to move a little bit. So if I can get KRE at a pullback of 65.50 on Monday, and I see a bunch of volume there, which is where there's a lot of buyers and sellers, that's going to be like an aggressive entry point for me. Hold on, baby. I'm talking. Um, so yeah, that's it. And anything you want to look at before we end today?
When you look at koi fan, I was looking at the sector or at the page on my screen. Do you look at industries and sectors on the same chart?
Let's see. I will show you. On the sectors, I primarily, yeah, like for a couple because like these are mostly like ETFs, right?
Yeah,
And these are ETFs too, but like ETFs of an industry, like so metals and mining. So when you're talking about like commodities, they're going to be a little bit different. So metals, gold, copper, they have their own indexes, but then they also have ETFs associated with it. So for me, I'm not going to put everything on here. I generally put the things that I trade. Like I trade things in XME. I will trade gold miners. I actually like the commodity itself better than gold miners, especially now. I would be more likely to short GDX right now since it's the weakest sector out there. I would short this, but I only put certain things on that I feel are things that I trade more often or that give me like a broad indicator of what the sector is doing. Same thing with semiconductors. Semiconductors are inside of XLK and technology too, but sometimes they do their own thing, right? Sometimes semiconductors can be up and the rest of the technology sector can be down, even though it's
yeah,
heavily weighted there. So I'll keep it up separately, especially because we know what NVIDIA and AMD have been moving the markets lately, Broadcom. So sometimes this could be up and the rest of the tech sector can be down. So I look at it separately. And same thing with oil and gas. It's a little bit different than like XLE, which is more of the energy sector, like the standard Exxon Mobil's, ConocoPhillips, Chevron, um, versus OIH, oil services. They're slightly different, even though there's some crossover. So, but really, like, I don't trade OIH much, maybe with the exception of like SLB, Schlumberger, which is also an XLE too. But it's just something I like to look at the entire oil energy sector. If they're all up, it tells me that the entire sector is up, right?
hmm hmm
So you could modify this, like you could take out oil services, um, and like KRE, I know is a huge component of the Russell 2000. So I'll look at that as like a proxy for what the Russell's doing too.
yeah.
Right. So yeah, I do. And like real estate, I never trade anything inside of real estate. So I could put that on my chart, but I know I never trade it. So I don't really care about what real estate's doing. And I don't really invest in REITs, which is more of a dividend play. I don't really invest in REITs and I don't trade a bunch of real estate stocks. So I don't really put it on my chart. Now, if you're different, you can do that, but like I don't really trade real estate. So no, I could look at it, but I don't.
Well, it's not doing much now anyway.
Yeah, it's and I feel like just looking at real estate over time, it doesn't really have a bunch of alpha. You're gonna find
Yeah,
other things that like perform either from to the upside or to the downside. Because like, look, if I'm trading, I want to be trading these things that have high alpha to the upside or the downside. I'm buying calls or selling put spreads here, and I'm buying puts or selling call spreads here on these names, right? So
yeah,
right? So that's really what I'm looking at. If I'm going to short something next week, it's going to be GDX and XLV. I'm not really paying attention to the short side right now because we are still in a bull market. In a bull market, most things are going up. So I'm paying attention to more of the pullbacks on the things that are on the upside. But if I were to short anything, if you're a person that just loves shorting things, then I'd be shorting GDX, healthcare, and then maybe chips, right? With the exception of
yeah.
NVIDIA. I wouldn't be shorting NVIDIA, but all of the other chip names don't look that great, like AMD, right? That's what I would be shorting. So that's really just what I'm looking at. It's just I'm building a watch list through looking at the sectors and the industries, figuring out what's strong and what's weak. And then
Mm-hmm.
generally the things that are stronger are going to keep getting stronger, and the things that are weaker are likely to keep getting weaker. So those are the positions that I'm taking. And the things in the middle, like tech right now, I'm staying away from. XLP, staples, staying away from. XLU, utilities, staying away from. Like they don't have any alpha. So if I get into a trade, those are the trades that are most likely to consolidate and go nowhere.
So for Google, do you think it's a good long term play still?
Yeah, I'm still in it. I still own my leaps. But I'm waiting for the administrations to change, to be honest. I think, like, look, I'm not making any judgment calls on who was elected president or not, but I do think that a Trump presidency is going to be more lenient towards Google than a Biden administration. That is
Yes.
that is my call on it. So, and I know, at being a lawyer, right, how long it's going to take to potentially try to break up Google, and this administration is going to be gone by the time that happens,
Yeah.
right? Because
So
the
right now it's down about $30 from its.
that's because of the news where the DOJ is
Yeah.
trying to get them to sell off Chrome, which they're absolutely not going to do. And even if even if the judge in this case does make that ruling, they're going to appeal it 3 or 4 times, and it's going to be years before that even happens. So that's number one. I think before something like that, before they are forced to sell off a Chrome or an Android, it's going to be years before Google stops fighting on the appellate level for that to happen. Number two, there's a good chance that the DOJ reverses its position when the Trump administration takes over, because they're going to be more pro business, pro M&A versus with the Biden administration. And I'm don't call me conservative, because I could say I'm economically conservative. But like in terms of my voting history, it's probably a little bit different. I'm not going to even get into that. But from an economic standpoint, um, I don't think that the Trump administration is going to force them to sell off these assets. And if you look at what the Biden administration has done in preventing mergers and acquisitions, you can make an argument that they have hurt some sectors by not allowing them to combine. So if you look at Spirit Airlines had a deal to sell itself, I think, to JetBlue and or Frontier, right?
Yeah.
And now they're going bankrupt. So
Mm-hmm.
what was better? Not allow so having a bigger airline in Frontier or JetBlue, or a company going out of business altogether for the economy, right? So that's just so I think that the current DOJ, regardless of politics, has been a lot more heavy-handed with M&A than they should have been, and I think that they have hurt the economy in certain companies as a result. Because what was better for Spirit Airlines shareholders? Combining with another company, or going bankrupt and potentially having to lay off a whole bunch of people,
Yeah.
right?
Mm-hmm.
Regardless of your politics. So I think the current DOJ has been a lot more heavy handed than the new DOJ will be with some of these bigger tech companies that did, in fact, support his election chances, too. So I think he's going to hand out some favors. That's just my reading of the tea leaves. So, yes, Google is down, but let's go look at their earnings. And we looked at their earnings, right? So Google is down, but it's fundamentally, like, if you're talking about trying to hop into Google, I bought my leap at a really really like low price, so I'm still holding on. Look at their revenue; they beat crazy in September, right? Does this look fundamentally like a bad company? No. They brought in
Yeah.
$88 billion last quarter in their earnings. Their earnings
Yeah.
per share expectations beat by almost 15%. They are an extremely well run company with amazing fundamentals. They're also one of the top three or four AI companies right now, which is the next market. Their cloud computing segment is growing. Their ad revenue is still growing. They own the top two search platforms in the world, and Google and YouTube. So, do I think this company is going to get bigger? Yeah. And then look at your kids. I know you have kids. I have kids. My daughter watches more YouTube than anything.
Yeah.
And that's crazy that it's been around so long. I watch a bunch of YouTube. We're streaming on YouTube right now. And my daughter, who is 5 years old, that's her favorite platform, which is why I bought some and the account for her. um, so that's my thesis on Google. And they just have the only thing that can really stop them, if you ask me, is the government. So if we go look at my leaps in Google,
Wait, while you're doing that, after you do that, can you go to the quarterly? I was looking at I went to their earnings, and it says their net change in cash is like negative 7.27 billion.
uh,
Trying to figure out what does that mean.
that well, but do you see how much cash they have on hand?
That's what I was trying to figure out. So it
uh,
was like, how much do they actually have?
they have billions. So I'll go look at that. So my strike price for Google is $80, and it's at 160 right now.
When did you
So
buy that?
I bought this like maybe 6 months ago or something like that. So and I'm up 2 grand on. I bought one in my account, my retirement, my wife's retirement, and my daughter's account around the same price, right? So I essentially
So
bought
it was
three.
already well in the money when you bought it,
Oh
though.
yeah, I always buy my leaps well in the money because I don't want time decay to really affect it.
Yeah,
So yes, so I'm at. So let's say these expire in June. I'm already going to be like, so if my strike price is 80, the stock price is double what my strike price is. So
yeah,
yeah, I'm sitting pretty on Google because of when I bought it, you know? Um, so that's, yeah, so I'm still bullish on Google. It just got to get through this DOJ stuff. And I'm just hoping that well, we know that the administration is going to change hands in January. So I like, if I'm going to get out of my leap, if I'm not going to convert it to shares, I'm going to do it like 3 months out when time decay starts affecting it more. Um,
yeah.
but if we go look at Google's cash position, and I imagine it's 2 billion down because it's probably been investing in certain things. So look at the assets, and that's what I'm saying. I don't know where you're. Yeah. So it the prior quarter of the year before, or I don't know why it says December, 24 billion in cash now has 19 billion. But look at the total assets, 430 billion in assets, 116 in liabilities. So it's 2.5 to 3 to 1 ratio, similar to NVIDIA, what we were looking at.
Yeah,
So that just means it spent an extra 2 billion probably acquiring something or buying chips or something like that over the last quarter.
yeah,
But if you look at their balance sheet, like total assets, 430 billion, total liabilities 116. Like you can't beat, like it looks just like Nvidia's balance sheet, which is why I'm still bullish on Google. The only thing that could stop it right now is the government.
what do you think a good entry point would be?
Other than where I bought it.
Yeah, clearly.
uh, Google does actually hit its 200. Oh no, that's not Google. That's Gold. I'm sorry. Google does actually right now. If it gets down to like ones, yeah, it's in range right now. If I were entering for the first time, I
Yeah,
love things. Look, it's bounced off that 200 a few times. It might dip a little lower. If you really want a conservative entry, I would say 150, right? But like more aggressive, I would even, it's not even aggressive, moderate would be 162, 163 to 160. If you're looking at extremely conservative, 150 would be where I'd enter. And I think I grabbed it. Stop it! I said to stop. I think I grabbed it probably around here, or maybe that last dip close to the 200. I bought it either here or here. I feel like it
Yeah.
was here because I remember like 125 ish or something. I bought it here or here, but it was when it checked back to its 200 moving day. And so if you just look off the percentage of the high, so the high, which high, all-time high reached at 191.75. So if we do
Yeah.
160 divided by 191.75, yeah, that's about 20% off. So yeah, I like it if it checks back down to the 200. But if you want to be ultra conservative, 150, but it may not get down there.
Might not get there.
Yeah,
Yeah.
exactly. So just in terms of entry points, or you can average in from like 165 down to 150 if it gets there.
Yeah.
That's how I would play it, right? But it does still look. It was just this was the day. Look at this candle right here. This is when the DOJ came out and said it wants it to divest Chrome.
Yeah.
That was the day. But other than that, it was doing decently well. My price to sell 2 out of 3 of my leaps was actually 190. And I thought it was going to get there after the earnings because this was, where was the earnings date? It shot up after earnings because it did really well. Even with the DOJ pressure came back. And I thought we were going to finally trying to maybe get back there. And then the DOJ comes out with news. And I'm like, damn it, you know. But, right? Because that's really my target for 2 of my leaps is 190. And then my daughter's account, I think I want to convert those to shares because, you know, I want her to keep those forever. But yeah, it looks good right here. But just looking at, let's go to it. And then sometimes you want to zoom out, especially on long term. What's the weekly chart doing? Yeah, I like that level. 150 would be where I would load up. But if you don't think it's going to get down there, yeah, that 160. That 160 looks good to me. That 50-week moving average looks like it's checking back there a few times. Right there. Here, here. That looks like the best way to, if you look at the weekly moving average, that 50 weekly moving average is around 160. So that's where I would take my first shot at it if I wasn't already in it some way. But yeah, I'm almost certain I got in around here, right here. And actually March, I think it was because I said about 6-7 months ago, I think it was this. I got in like on this candle, on this weekly candle right there. And bought a leap.
Nice.
Yep.
And what's your color coding again? I know the yellow is 200.
200, 50, 34, 21.
Right.
And remember, it's based upon your chart. So if you're on a weekly chart, this is a 21 week, 34 week, 50 week, 200 week. If you're on a daily chart, then they're daily moving averages. So they're going to look different depending on what chart you're on.
And does that automatically shift?
Yep. Unless you do some sort of coding where it doesn't, where it's only daily moving averages on a weekly chart. There's ways to do that, but it's either buying another indicator for it, or you can even code it in ChatGPT now to do that.
Yeah. I can't figure it out.
Anything else you want to look at?
Yeah. Yes. No, that's it for right now. But you said it was yellow.
Yellow's my 200. And so if we just go to my studies, can you see my studies on my screen? Can you see the screen that says edit studies and
Now
stuff?
I can. Yeah. No.
You
I do
can't?
not. I just see the chart. Still.
Oh, it's because of this storage. Hold on. What about now?
No, so the chart is the well, don't worry about it, man. My goal is to go back. I need to go back over these anyway, man.
What about now?
Oh yeah, I see it.
All right. So Here, I got a 21, a 34, a 50, and a 200, and then I just color code them by going in and then selecting a color.
Yeah. No, I've done. I always forget because I do it on my charts too. And so I always forget which one is which.
Yeah. I just know now because it's like my standard, you know?
Yeah.
So, yeah. All right, that is it for this week. No Comma Sunday service, making it rain without the umbrellas. 8 a.m. every Sunday. We talk about the stock market to help people better understand it. And if you want to be directly in the Zoom and ask questions, then DM me on social media or leave a comment on one of the videos. All right, Ange, peace. Talk to you
All
later.
right. I appreciate you as always.
Yep, peace.